I'm not even here to pitch MicroStrategy stock. I'm actually here to pitch Bitcoin. What I'm saying is Bitcoin is the most important thing of the century. It is digital energy. It is digital capital. It is as profound as electricity 100 years ago. It is profound as, as gunpowder, right, was, or steel, or fire. If you figure it out, you can do some good for your community, your family, your company, your country. I'm delighted to see you all tonight. Okay, check. Can we just adjust? Okay. Thanks for coming. I'm going to talk about money. If you don't want money, if you don't need money, if you don't care about money, you could ignore me. If money is interesting to you, then this should be an interesting talk. The year's 2025. I think 2025 is the first year of institutional adoption of Bitcoin. I think of it as the first year of the gold rush. There's a 10-year period from 2025 to 2035. I refer to that as the gold rush years. Why? I'm going to explain it in a second. But the short of it is, this is the first year that a mega corporation, a public company, could start to buy Bitcoin in quantities, billions. This is the first year that they're seriously talking about Bitcoin being purchased by governments, by states. And by the time we get to 2035, 99% of all the Bitcoin will have been mined. The last 1% gets produced in the next 100 years. So if you want Bitcoin, you probably want to buy it in the next 10 years, because once you get to 2035, for all practical purposes, it's a capped supply, and the only way to get it is to bid up the price astronomically. So it's an important year. Let me start by talking about economic and technology challenges. This faces every investor, every executive, everybody in business, this challenge. First of all, if you're an investor, you've got to decide what to invest your money in. This is the list of all the various assets. You can buy Magnificent Seven, NASDAQ stocks, you can buy bonds, you can buy currency, you can buy REITs, you can buy real estate. What you see is that conventional wisdom is you got to beat CPI, which is supposed to be 2 or 3%, and people think they're getting more than 2 to 3%, and then that's good. But the truth is, the real inflation rate isn't the CPI, it's the monetary inflation rate. That is the rate at which the money supply expands, or the rate at which scarce desirable assets appreciate in price. An interesting surrogate would be, what's the cost of an acre of land in Miami Beach on the water? My house was built on about 3 acres, 2 acres and 1, and that land went for $10,000 an acre in 2030, and that land's at least $10 million an acre today. If you do the math, it works out to more than 7% inflation. If you look at Palm Beach real estate on the beach, there's no way it's going up 2% a year. Things that are very scarce, very desirable, are appreciating closer to the S&P index. If you want a surrogate, if you're wondering how fast is the money supply expanding, what is the cost of capital, what do I have to beat as a hurdle rate to keep my wealth, it's probably the S&P index. And so what you see here is most diversification is just destroying wealth. If you diversify out of anything other than maybe you get the Magnificent Seven, you're probably underperforming that monetary inflation rate. That's a challenge. If you're running a company, a public company or private company, if you can't grow organically 15% a year, if you're not growing your cash flows 15% a year, if you don't have a growth story saying we're going to be 20% next year, another 20, nobody wants to invest in you. You can't go public. If you are public, public company investors lose interest in you. Your options market collapses. Your liquidity collapses. You're, in essence, a zombie company. You're not going to go out of business. There's a lot of honorable businesses that grow 1, 2, 3% a year. In fact, it works out that 99%, if not 99.9% of all businesses cannot grow 15% a year. They won't tell you that, right? They'll make you feel like you're a failure or a loser if you're not growing 15 or 20% a year. But this is a dilemma, and it faces every public company, every private entrepreneur. And then here's a chart that's sobering. In the 21st century, the winners are all digital monopolies. That is the Magnificent Seven, and that's the S&P 500. And what you can see is if you're Apple, you're Google, you're Meta, you're Microsoft, you're Amazon, you're winning. Everybody else is losing. 493 companies. The S&P 500 is the 500 greatest companies in the world, or at least in the U.S. 493 of the 500 are losing. Okay? Don't feel bad if you're not outperforming Jeff Bezos. 20,000 retailers had to fail for Amazon to succeed. 20,000 media companies had to fail for Google or Meta to succeed. 20,000 device companies have to fail for Apple to succeed. It's really a sad situation when you think about it. But if you're an investor, your portfolio doesn't work if you don't own some of the Magnificent Seven, right? Every other investment idea probably not working. And if you're a company executive, you're probably not winning. Now, in technology, if you want to win, you can't miss the next wave. Whether it's personal computers, whether it's the graphical user interface, whether it's the internet, whether it's mobile computing, cloud. Right now, everybody talks about AI. If you don't hear about AI, you're probably deaf. But I'm here to talk about what I think is the most compelling next wave, the wave that you can catch. If you think you can compete with NVIDIA, you have at it. But I don't think Apple thinks they can compete with NVIDIA. It's not easy. But digital capital is the next wave, and everybody can catch this wave. Now I've laid out the problem. Let's talk about the Bitcoin solution. What is Bitcoin? Bitcoin's the next wave. Today, it is the seventh largest asset in the world. And you can count them, right? Number one asset in the world, gold. 5,000-year head start. If you're not 5,000 years old, if you don't want to wait 5,000 years, you're in the right place, because I'm going to give you a fast track. After that, you got the Magnificent Seven. You got NVIDIA, you got Apple, you got Microsoft, you got Amazon, you got Alphabet, you got Meta. And then just creeping in there, you've got some silver, and then you've got Saudi Aramco. But if you look at this, what you'll see is that the fastest horse in the race, the one that's actually moving up the leaderboard the fastest, is Bitcoin. 62% a year, ARR. Not for the past year, not for the past 4 years, not for the past 6 years, for the past 10 years. Ever since it started, more than 62% a year. That's just the past 4 years, though. And it is running to the top, and it will run past all the Magnificent Seven, and it will run past gold, and I'm going to show you why in the rest of my presentation. Now, it's not just the seventh largest, right? It's the fastest growing. It is the most popular in the world, most popular asset. I walk to the beach in southern Italy, people recognize me. I'm walking down into a hamburger shack in Uruguay, people recognize me. I'm on the tarmac and the runway in Switzerland. The guy that's servicing the engines and he's guiding the airplanes on the flight line, they recognize me. Right? Bitcoin is spread across hundreds of millions of people. Probably 500 million people know what this is, and they're all very passionate about it in a way that they're not passionate about maybe Saudi Aramco or Meta stock. It's the most interesting because something is happening every minute of the day. You know, it crashed at 90,000 2 days ago. People are losing their minds. Smashed through 100,000, my phone's ringing off the hook. It's always moving. much more interesting than these other things. It's pure digital. Something that, if you can wire $1 billion from one iPhone to another Android phone between 6 billion people in a split second, that becomes very interesting and very digital, right? You can't digitize silver, you can't digitize gold. Most of these other things are just securities. You can't even take custody of your own security. You can't trade those securities on Saturday afternoon. So Bitcoin is pure digital asset. It's useful. How useful? If you need $1 billion in 5 minutes on Saturday afternoon and your life depended upon it, there's only one thing up there that will actually give it to you. Only one thing. People, what's the consequence of that? Well, it's volatile, it's interesting. And lastly, it's global. The Magnificent Seven stocks are really just Western. They're United States, a little bit of Western Europe. Saudi Aramco is Middle East. You don't see any Chinese companies up there, right? And so Bitcoin is very, very rare combination of things that make it interesting to billions of people around the planet. Now, what happens when I put Bitcoin on my asset allocation chart here? Well, it just punches a hole in it, right? Like when I didn't put Bitcoin up there first because you wouldn't see anything else. Everything else is relatively uninteresting against 60%. What you see up there is there's an answer, and then there's a bunch of noise. There's a signal, and there's a bunch of noise. And if we look at it, that's 60% for 4 years. And when you look at it against this chart, this makes it much simpler. You have a bunch of money. Lockdowns come along. In August of 2020, you can buy bonds, you can buy gold, you can buy real estate. All three of those don't beat the S&P index. They don't beat the hurdle rate. The conventional cost of capital is the S&P index. It's 13% every year for 4 years. Real estate, probably less volatile, but lower boost. Gold is only half as powerful. If you capitalize your entire bank on bonds, well, you end up with Silicon Valley Bank, right? Your bank goes bankrupt. Bonds are an awful investment. The Magnificent Seven, good idea. Buy the 7 greatest companies in the world. Okay, good idea. That doubles the S&P, right? You can outperform if you just buy the good ones. I've said oftentimes, I say, diversification is selling the winner to buy the losers. So when you're holding the S&P, you gave up the Magnificent Seven. You might as well just buy the top 7, throw away everything else. But the problem is, you're living with the top 7. The 3 richest guys in the world are going to be on the podium at the inauguration on Monday. They are Bezos, Musk, Zuckerberg. It's not a surprise. And then Bitcoin. Bitcoin is, if you can't be Bezos, Musk, and Zuckerberg, and if you're not going to actually buy those stocks, how do you outperform them? Well, Bitcoin is double. Bitcoin is 4 to 5 times better than the S&P index, right? It's a pretty compelling chart. You might say, well, it's just the last 4 years. But the truth is, Bitcoin's the best asset in 11 of the past 14 years. This has been the story for 15 years now. If you look at every other asset class, well, you've got one that's up 147% a year on average since 2011. The next best is 16. And everything else is just languishing, right? There's a signal there. It's screaming at you. It's not just the best performing asset, it's the best performing uncorrelated asset. If you go to conferences of high net worth individuals, the affluent, JP Morgan puts on one. It's called the Alternative Investments Conference. The idea is you're supposed to find an alternative thing to invest in which isn't risk assets. You're not supposed to just buy a portfolio of equities. So find me something that will go up in value that isn't correlated to equities. This is what every endowment manager at Yale or Harvard is looking for. They're looking for assets they can buy that aren't correlated to the stock market. It might be timber rates, or it might be real estate. Real estate's the most common. It might be intellectual property rights, or or some other random thing, a natural gas pipeline. Well, in this case, it turns out that Bitcoin is the uncorrelated asset, the greatest uncorrelated asset in the world, but you don't have to take my word for it. These are Fidelity's numbers. It's, you know, if you check it, it just has the weakest correlation, you know, very low correlation to the S&P, but also it's got the highest Sharpe ratio. So for the volatility you're taking, you're getting outsized performance. A year ago, the first ETFs were approved for Bitcoin, right? In January of 2024. BlackRock brought out one called IBIT. BlackRock is the largest money manager in the world. They have 1,101 ETFs. And the Bitcoin ETF went from dead last to number 13 in 12 months. Basically, in the first year, it skyrocketed above 99%, right to the top. And in fact, it didn't just go to the top. It turns out that IBIT is the most successful ETF launch in the history of Wall Street. In the last 40 years, the biggest innovation since Bitcoin, the biggest innovation, if you got to go back 40 years, is ETFs. This idea you can buy a package of the S&P index called SPY. And they've been around forever, and this Bitcoin spot ETF just blows past everything and scorches the earth. That's how much demand there was to invest in this asset. In fact, BlackRock's ETF outstripped its own gold ETF in the first year. Again, gold 5,000 years old, everybody knows what it is. Digital gold in the first year blows past. That's how fast it's moving. There are 20 ETFs, the top 20 ETFs we collated. Turns out 10 of them are all Bitcoin related in the last 12 months. So what you can see is that Wall Street is fascinated with Bitcoin-based ETFs, derivatives, anything that's related to Bitcoin is really changing the world. And those ETFs had not a nickel in them January 1st of 2020. Now they have $109 billion of AUM. And you can see this is becoming a major trend. But it's not just a trend in the U.S. These ETFs are popping up everywhere in the world. You can see these are the global ETFs. They're popping up in Hong Kong and Germany. They're popping up in South America and Brazil and Australia. Pretty much every major capital market has an ETF launching. Why? Because they make it possible to buy Bitcoin in 10 seconds on the phone. Also, because if you're China government, you want people to keep their Bitcoin in a bank regulated by a Chinese regulator. You don't want the capital to flow out of the country. And so these solve capital control issues, compliance issues, tax issues, convenience issues. And 6% of all the Bitcoin has just been slurped up by these ETFs. The people that are buying those, generally, they're just long-term holders. They're buying them for exposure. And so as they buy up this Bitcoin, they're taking it out of circulation. The price is being squeezed up. I was talking about alternative investments, right? Well, here's 60 global billionaires invested in Bitcoin. What is Bitcoin? Imagine Bitcoin is 100 rich families sit around and say, well, we like money, we don't trust banks, we don't trust governments, we don't trust any currency, we like to keep our money, but we don't trust each other. So they create a bank in cyberspace, they cap out the number of units at some number, we'll call it 21 million, and then all those families can buy into that bank, and since they don't trust each other, they all run a copy of the bank software. That's Bitcoin. Bitcoin is just a very elegant idea for how you get to keep your money, right? Rich people like their money. They want to keep their money, right? This is spreading. Those 60 billionaires, those are just the ones we know. not the ones that own it. I'm sure that a lot of people own it that aren't going to disclose it. But the point that I want to make here is that Bitcoin's the fastest growing alternative investment for high net worth individuals in the world. And, you know, if you think about it from first principles, it's by far the easiest. You know, it's not easy to buy buildings or buy, you know, Paul McCartney's music rights or buy natural gas pipelines. But you can buy $20 of Bitcoin, 200, 2,000, 20 million, 200 million, 2 billion, 20 billion. And it doesn't matter how much you buy. You have the same exact property rights, the same exact asset as everybody else. This is very compelling. I say to people sometimes, you're trying to figure out what to buy to give to your kids or grandkids. Buy something that passes the Bernard Arnault test. Buy something that a person richer than you, more cultured than you, will want to buy from you in a decade, right? If the billionaires want it now, they're going to want your Bitcoin in a decade. If they want your Bitcoin in a decade, then the price is going up. It's not going down. You'll always find a willing market for it. 70 public companies right now are capitalizing on Bitcoin. In August of 2020, that number was 0, and MicroStrategy was the first. And since then, we're starting to see a viral effect. This is an economic dynamic spreading virally around the world. Why? Because public companies can issue millions or billions of dollars of securities every week, and they can do it again, over and over again. So once a public company capitalizes on Bitcoin, they don't just buy 10 million a year or 10 million a week. We went to the market and we raised $1 billion in a convertible bond 1 week. It worked out well. The next week we did it again. The next quarter we did it again. The next quarter we did it again. Last quarter we started to raise $1.5 billion, and then we decided to make it 2, and then we decided at the end of the day to make it 3. So when you're playing with public company money, the amount of capital here is orders of magnitude more than you would see with private corporations. And as each one of these flip, they go from, if the miners flip, they go from selling Bitcoin to buying it. And another example, Mara up there, they went and did a convertible bond offering 1 week for something like $800 million. They came back the next week and did another 600. I think they did $1 billion the first week and then like $800 million the next week. And so these are very, very powerful actors in this space. And every major market, this is spreading. Here's a snapshot of Bitcoin ETFs versus the commodity ETFs. What you can see, like we're looking at silver and gold and Bitcoin. So Bitcoin's the winner. Gold is the second best commodity. There really isn't a third, right? The rest are just trading vehicles. You're not going to actually hold any other commodity for any material period of time. So Bitcoin is generally just eating all the commodity ETFs. This is Bitcoin against the bond ETFs. What you can see here is, you know, all the bonds are kind of slow, sleepy money, and Bitcoin is blowing past all of them, right? Do you want 4% return a year, or do you want 99%? There used to be a 60-40 bond portfolio, you know, 60% equity, 40% bond. Now Bitcoin's creeping in to be 1 to 3% of those portfolios. It'll move to 5 to 10% of those portfolios. As it does, the price of Bitcoin is going to skyrocket. This is all these are the largest ETFs in the world. And so it's ranked from the number 1 in assets, the SPY, all the way down. You see where IBIT is on this chart, you know, from nothing crawled up on the board. But what you can also see is that with the performance of IBIT, it's pulling, and Bitcoin, they're pulling so much capital. They're going to slurp the capital out of all the other ETFs. And I don't think it's unreasonable to forecast that IBIT may very well grow to be the biggest ETF in the world within 10 years at the rate it's going right now. And the bad news for you is Bitcoin is beating your favorite hedge fund. These are the best hedge funds. we can find 4 hedge funds that could outperform the S&P in 2024. Most hedge funds underperform the S&P in 2024. But Bitcoin, of course, is crushing all of them. And the joke, of course, is, the bartender, the Uber driver, the aircraft mechanic, they're all buying Bitcoin, right? And they're totally crushing all of the masters of the universe with their PhDs in finance and all of their computers and their 18 screens and all their high-frequency trading, right? And it's a reckoning. Bitcoin is the new benchmark. What is it? Well, you have to go back to first principles to figure out what is Bitcoin. This is the great quote at MIT, where I studied physics and thermodynamics and engineering. And everybody in the world knows Satoshi discovered a method to transfer value without a trusted intermediary. That's been repeated ad infinitum. It's repeated ad infinitum brainlessly by people that love Bitcoin, by people that hate Bitcoin, by people that want to criticize it. Right, this is the thing. But they don't really think hard about what that means. Because if you can come up with a way to send value between 2 individuals without a trusted intermediary, you've come up with a way to store value without a trusted intermediary. So the profound idea is not, I can send $1 billion from me to you without a bank in the middle. The profound idea is I can put $1 billion in cyberspace for all of eternity without a bank in the middle. That is to say, we put money in orbit. The difference between putting something in orbit and then putting it in a ballistic trajectory is the ballistic trajectory comes back to Earth. The thing in orbit orbits for 1 billion years. You put it up into a fast enough escape trajectory, maybe it orbits the solar system. Or the sun, maybe it escapes the solar system. Putting something in orbit is profound. Putting money in cyberspace, storing value in a network that doesn't rely on a government, a company, a computer, a counterparty, that's the profound idea. Bitcoin, Satoshi discovered something which is profound. It's digital energy. It's the conservation of energy in cyberspace. It's the first digital thing that you can't copy. You can copy everything else. It represents the transformation of capital, our capital, from finance and physical assets to digital. It is the digital transformation of everything that we think is valuable in this world. And here's a chart of it. Global wealth, $900 trillion. People own things they think are valuable, bonds and currencies and equities and real estate and art and gold. But if you look at that chart and you think about it a bit, you realize that half of those assets are held for the utility value. When you have a car or a plane because you want to fly in it or drive it, it's useful. When you have a building because you need to work in it or manufacture in it, it's useful. But when you just buy something because you need to park your money there, it's long-term capital, it's store of value. It's the rich dude that has 10 houses but lives in one, right? They're just land banking, right? When you buy the bar of gold, it's the rich family that has 87 Picassos in a vault under a mountain in Switzerland. They didn't buy them to look at them. They're just parking their money there. So I'm going to call that long-term capital. That's half of everything, right? When you're a company with bonds on the balance sheet, you're just parking your capital there, right? And so you can see with currencies, with bonds, it's pretty obvious. But a lot of people buy real estate and a lot of people buy stocks because they just have to buy something. They're just putting their money there. Now here's the problem. That $450 trillion parked in financial assets and physical assets is struggling against entropy, against chaos, against inflation, against competition, against the passage of time, right? You had a bunch of land in Pacific Palisades, right? Fire hits. It's not worth as much. You had something on the Gulf Coast of Florida, a hurricane hits you, right? You had a bunch of buildings in downtown Kiev, or maybe you're invested in the best of Siberian real estate, or maybe you had ships and they got caught in a storm and one of them sunk, right? How does your capital get destroyed? It gets destroyed by war and taxation and expropriation and, you have $10 million house in Miami and then the state of Florida hits you for 2% of it every single year. $200,000 tax bill, right? If you actually took all your money and you just bought a nice property in Miami, your money would be gone in 15 years, right? Your capital is being destroyed all the time. How big a problem is this to the world? It's a $10 trillion problem, okay? $450 trillion decaying at 3% a year. It's $13 trillion, right? It's a lot of money. And it is the gradual but progressive and certain decay of your capital assets because you have them in short-lived storage containers. Bitcoin is an asset without the financial risk of your currency, your stock, or your bond, and it doesn't have the physical risk of the real estate or your Picasso or whatever concrete thing that you want to hold. And so now when you come back and look at that long-term capital and you think about smart people, you say, well, I'm a smart person. I'm a Russian. I have a bunch of real estate in Siberia. Oops, maybe I'll buy some Bitcoin. I'm a Chinese, wealthy person, but I want to leave China at some point. I can only take $50,000 of cash with me. Maybe I'll buy some Bitcoin. I've got a bunch of warehouses. They're rusting in South America. Maybe I'll buy some Bitcoin. I'm worried about the government toppling in my local African country. I'll buy some Bitcoin. I just buy some Bitcoin. I believe in tech. I buy Bitcoin. Bitcoin is transforming and it's slurping out that long-term capital. So people go, well, what happens if it stops going up? It's like, well, what happens if water stops flowing downhill? What happens if time goes backwards, right? What happens if the law of thermodynamics no longer holds? What happens when people decide they want less secure things rather than more secure things? What happens when they want crappy stuff instead of good stuff? Right? It's not going to happen, right? There's a natural progression here, which is intelligent people are moving their money from a more disordered state to a less disordered state, from a shorter life expectancy container to a longer life expectancy container. They're moving from an unsafe place to a safer place. And that is the digital transformation of capital. The greatest transformation of the 21st century is not digital photos, it's not digital books, it's not digital newspapers, it's not digital storefronts or digital menus or digital audio. Not that those aren't cool things, you can make $1 trillion company on them. But the greatest transformation of the 21st century is the transformation of capital, right? Bitcoin is digital capital. That's the profound idea. And digital capital is just economically and technically superior to physical capital. If I give you a bunch of money and I give you the opportunity to buy a $100 million building in Miami, and then you start thinking, or maybe you put it in Kiev, or maybe it's in LA, or maybe it's in San Francisco, or maybe it's in Istanbul, and you thought about it, what are the problems with the building? The problems are the taxes on it, the traffic in front of it, the tenants, the torts, the trouble, the mayor. The governor of California says you can't sell your property anymore to protect you, right? At one point, the mayor of New York rent-controlled every property you owned. At another point, they told you couldn't charge your tenants rent because they might not be able to pay it. You have all of these problems you got to deal with, not to mention corrosion, hurricanes, fires, right, etc. If you could get rid of all of them, then your building would be more valuable. But what about the good things? What if I could cast a magic spell? What if I could make the building invisible, indestructible, immortal, teleportable, programmable, divisible, fungible, configurable? Right? What if I could just move the building in a split second to a place where the mayor didn't hate me? Right? Might be useful. right? That's digital capital, and digital capital is global capital. Because we'll do a little experiment. I'm going to take all your money, I'm going to cast a magic spell, and it's all transported into a mixture of banks in African countries. 27 banks in 27 countries, and you're converted into the local currency. You know, the currency of Zambia, Central Africa, and some Kruger rounds, and some Naira, and some whatever, and some whatever. And then I give you a green button and I say, well, do you want to reverse that spell and just move your money back to the US? Would you punch it? Of course you would punch it. What if I didn't give you the green button? What if I gave you an orange button? I said, you can either invest all of your money in diversified portfolios of companies and real estate in Africa, or you can convert it into Bitcoin, put it in cyberspace. And what you see, and now let me make it easier for you. I'm going to drop you and all your money in North Korea, or Cuba, or I'm going to put you in Venezuela, or Russia, or Turkey, or Kiev, or Lebanon, or Syria. And what you can see is that all around the world, by the way, I'm going to put you in Europe. You know what the Europeans think? The Europeans want the dollar. If you actually ask people in the crypto industry, what's the demand for digital euros versus digital dollars? It's 99% dollars, 1% euros. The Europeans don't even want their own euro. Every one of them would dump the euro and go to the dollar. And that's not speculation. We know that for a fact, because when they're given a choice, they all choose the dollar. And so the truth is, you look up at that map, there's just about nowhere in the world you want to be invested in real estate or diversified portfolios of currencies, bonds, or companies that's better than the US. And so what if I can't bring my money to the US? And the truth of the matter is you can't. Russians don't get to invest in the US. Chinese don't get to invest in the US. You're Chinese, you have $1 billion, you can move $50,000 out of the country per year. Right? In Africa, they don't get to invest in the US. You know, it's illegal to hold a dollar bill in Nigeria. It's illegal. Okay. So in this particular case, the entire world is looking for a place to put their money. If they can't move and leave, then they put it in cyberspace. Bitcoin represents a bank in cyberspace. And when they put their money into the Bitcoin bank, they're getting the same performance, the same protection that the San Francisco billionaire gets. Right? Everybody's equal. One last way to look at Bitcoin, it's a revolutionary advance in capital preservation. Your commercial real estate building's good for 40 years. You know, your house in Miami, you know, you probably will hold it 20 years before you paid the equivalent in taxes on it, right? Maybe you've got some other financial assets that last longer, but for the most part, people hold things that are good for 10 to 100 years, and it's hard to get a 100-year asset. Well, Bitcoin's a 1,000-year plus asset. If you're looking for something that you can buy, hold in your family, and give to your grandchildren's grandchildren, Bitcoin is that thing. You don't know where you're going to be living. You don't know what regime you'll be under. There's no bank, there's no company, there's nobody you can trust that'll be around in 150 years. The Bitcoin you can take with you. And why? Well, because it's literally secured by the most power in the world. It's a power network. It's a monetary network backed by computer power. More computer power than Microsoft or Amazon could muster if they wanted to attack it. It's backed by electrical power. A gigawatt is a nuclear reactor, 20 full-on nuclear reactors, but scattered everywhere in the world. Backed by hundreds of millions of holders. Backed by 600 million fanatic crypto people. How fanatic? Fanatic enough to tilt the election in favor of Trump. All three, you know, the House, the Senate, and the White House. And they're not just crypto fanatics in the US, they're crypto fanatics everywhere. South America, China, Russia, Africa, everywhere. And it's got real money in it. So this is a very powerful network. It's the most powerful crypto network in the world. People ask, well, what's it backed by? Power, right? Well, why Bitcoin instead of the other one? Well, 99% of the power is in this one. You can copy it 1,000 times, but the point is there's got to be a winner. Just like there had to be a Google Just like, well, why do we use English? Well, because all the rich, powerful people speak English. Well, what if they all change? What if they stop speaking English? Well, why would they? They have all the power, right? Why do we use base 10 math? Because all the rich, powerful people made their machines with base 10 math. It's a protocol. Once you adopt the protocol, it tends to go on for hundreds of years or even thousands of years. My 21-year Bitcoin outlook. You can download this model. Just Google Bitcoin 24. You grab it off of GitHub. It's a nice spreadsheet. You can plug in all your own assumptions. Come up with your own forecast. But this is what I think. I think you're going to see the money supply to continue to expand. I think you'll see 7% or more monetary inflation. I think certain assets like real estate will keep up with that inflation. I think that equity will outperform by a few percent because of AI and technology. I think eventually there'll be a million robots making a billion robots, run by a robot, and the company that owns the robots will be very valuable, right? Maybe that'll be Tesla, maybe that'll be Robot Corp. Who knows? But I think that the Magnificent Seven, the big tech companies, will do okay. I think gold will gradually get demonetized. I think as people discover digital gold, they'll sell their gold, they'll buy digital gold. And I think Bitcoin is going to outstrip everything. I think Bitcoin, right now, it's growing 60% a year. It's been growing 60%. I think that over the next 20 years, it'll go from 60% to 55 to 50 to 45 to 40 to 35 to 30 to 25. Eventually, the S&P index may be growing 12 to 14%. Bitcoin will be 50% more. It'll be growing 18 to 20%. It'll always be higher performance than the S&P index. It'll always be more volatile than the S&P index. But it will gradually converge on being 50% better than the next best thing. And if you work out that math in your head, it works out to about 29% ARR over 21 years. And when you plug in 29%, that means by the year 2045, I think Bitcoin should be about $13 million a coin. It means that every Bitcoin that you sell today is going to cost you $13 million. I would not short it. It means every Bitcoin you don't buy today is costing you $13 million. It means that if you want to give $13 million to your granddaughter, just buy one Bitcoin, put it in their estate, and just let it compound. It's maybe one of the greatest estate planning techniques ever, right? And you can see the world doesn't have to turn upside down. Bitcoin just goes from being 0.1% of the assets of the world to being 7%. And this chart of the wealth in the world looks like this. At 7% USD inflation, the total asset pool goes from 900 trillion to 4,000, 4 quadrillion. And Bitcoin looks like 280 trillion. So it's just a small blotch in the left corner. It's not as big as equity. It's not as big as real estate. It's not as big as bonds, right? Global anarchy did not ensue. It's just you have an emergent global monetary index. When people with money just want to keep their money without betting on a real estate idea, without betting on a company idea, without betting on technology, when they just want to park their capital somewhere, then this is just a no-brainer place to put it. Now, I said we're entering the era of institutional adoption. In 2024, Bitcoin emerged as an alternative to bonds for institutions. And there were a couple of catalytic events. The approval of the ETFs in January was a big event. The marriage, the partnership between the crypto industry and the Trump organization and the Republicans was another very big event that happened around April, May of the year. Then the red wave sweep, November 5th, was a third monstrous event. Those three things catapulted us to a new state. Along the way, there was a massive fight over whether banks could be able to custody Bitcoin. And that fight manifested in something called SAB 121. It was a rule put forth by the SEC effectively preventing banks in the United States from custodying, holding, trading, handling Bitcoin. And The House of Representatives didn't like that. The industry didn't like that. The Senate didn't like that. They actually put forth a bill to repeal it. It passed overwhelmingly in the Senate, in the House, went all the way to the White House, and Biden vetoed the bill. Well, Biden's going to be gone in a few hours. We have a new head of the SEC. I think we have very credible beliefs from the industry that SAB 121 will go away next week. And that will open the floodgates for every bank in the United States to start to handle Bitcoin. When that goes away, all of the financial regulators in Singapore, UAE, Saudi, in Europe, in South America, even in China, even in Hong Kong, believe it or not, they all, and even in Russia, I'll go on a limb, they all take their cues from what happens in Washington, D.C. So when D.C. flips on this, you're going to see a rippling set of dominoes fall, and I think you'll see a lot of banks everywhere else in the world will also get involved in handling Bitcoin. And then that leaves us one last thing that's going to go on, which is what we call FASB accounting or fair value accounting, and that became mandatory January 1st of this year. And so those things are very important to public entities. There's 115 public entities right now holding Bitcoin. Remember, there was one 4 years ago, and now it's spreading very virally. And not holding a small amount, they're holding 2,700,000 Bitcoin. Okay, and if you look at the wave of political support, Trump, Vance, RFK, Lutnick, Bessent, Ramaswamy, Walz, Musk, they all like Bitcoin. They all support Bitcoin, right? The entire cabinet is pro-Bitcoin. Right? And in addition, the White House likes Bitcoin, the Senate supports Bitcoin, the House supports Bitcoin, and Wall Street has flipped. You have a senator, Cynthia Lummis, standing up, putting forth a bill for the U.S. to create a strategic Bitcoin reserve. BlackRock is the most influential money manager in the world. They have $11 trillion of assets. The guy there used to be against Bitcoin. He called it an index of money laundering in 2018. He's the single most influential person in Wall Street. This is what he said a few months ago.
Now, I know you have been a leader in willing to embrace crypto. You have made it so that people can be in Bitcoin. We hear that you are thinking about Ethereum. These are incredible things. Now, BlackRock is not known as a gunslinger by any means. So you obviously must believe that this maybe is an alternative. Is this an alternative in order to be able, because of a deficit, maybe something long-term people should have?
Absolutely. As you know, I was a skeptic.
Yes.
I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. If you want to hedge hope, Bitcoin is not an instrument for hope unless you're hopeful you're going to make a lot of money on it. But I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
I couldn't agree more. I changed my mind about it when you did. You admitted my thinking. It was like, you don't believe it, so I can't believe it. I want to thank Larry Fink for the message of optimism.
Thanks.
And also for a great quarter. Larry Fink is the co-founder, chairman, and CEO of BlackRock, I think the most important investment company in the world.
Thanks, guys. Carl.
That's Wall Street flipping. And here...
Never sell your Bitcoin, right?
That's Donald Trump giving you some good advice. By the way, he stood up on stage and said the U.S. would not sell Bitcoin if he's president. The only things the U.S. won't sell are their national parks and their nuclear stockpiles and their Bitcoin. They would sell everything else. They'll sell your Google stock, your NVIDIA stock, your real estate, your bond portfolio, your art collection, your collectibles collection, your sports team, etc. That's a very profound statement. You might go past too fast, but just think about the guy.
Never sell your Bitcoin, right?
President of the United States telling you that. This is Senator Lummis.
I encourage people to buy and hold. I encourage them to say Bitcoin for their retirement, for their future. And that's because as the Congress spends trillions and trillions of dollars and is flooding our economy and the world economy with U.S. dollars, there's no way that we cannot debase the value of the U.S. dollars.
It's very important here. Bitcoin's a digital commodity. That gives it an ethical advantage, a political advantage. It gives it an ideological advantage. There's no way she could stand up there in front of the Capitol and say, I encourage you to buy Apple stock or Magnificent Seven or NVIDIA, right? She might be able to say, I encourage you to buy gold. She could tell you should buy a house. She could tell you should have a chicken in every pot, right? She can tell you need electricity. These are commodities. Right? The fact that Bitcoin is a digital commodity means a governor, a senator, a president, anyone can advocate for this in an egalitarian, utilitarian fashion without a conflict of interest. It's a very, very important nuance here. And then the entire mood in the market is really switching, and you can see it here in this exchange with Joe Kernan and Mohammed El-Arian, who is probably the most well-spoken, well-respected modern economist.
There's a lot of people that are nodding with you because we can deflate our way out of some of the step, but the difference between 2% and 3% compounded for the dollar is devastating. And I don't know, for you to just blow it off is a little weird. I mean, there's a reason they want 2%. Anyone can move goalposts. I mean, if you compound 3%, that's 50% higher than 2%.
Do you know where 2% comes from?
No, but
2%
3%, it would be, would make all of us feel awful in 10 years.
2% comes from the Bank of New Zealand in the early 90s.
It seems like a good number to me.
But it's an arbitrary number. What you've got to take into...
5 is an arbitrary number. If you want to deflate 36 trillion, let's go to 10 then.
I don't want to pull the rug from under U.S. economic exceptionalism. I think we are outpacing the rest of the world.
You're starting to at 3%.
I think we are investing in the economies of tomorrow, in the growth drivers of tomorrow.
The government?
No, the private sector, everything else. If you push this economy into recession...
The private sector is not what causes the inflation.
Joe, if you push this economy into recession, you will not just lose current standard of living, you will lose future standard of living. We are in a very good position.
3% loses the future standard of living. That's the problem.
2.5 to 3 is what I said. You went immediately to 3.
Well, if you say 3 at the high end,
and as long as inflation,
okay with it.
As long as inflation expectations are stable, you can navigate.
You better buy some Bitcoin,
it gives you a sense that Bitcoin has creeped into the dialogue everywhere in the world. So we're year one of the crypto renaissance. This is what you can expect in 2025. You're going to have improvements to the ETFs. You're going to have fair value accounting. You're going to have a pro-Bitcoin cabinet, the repeal of SAB 121, an end to the war on crypto, a digital assets framework of some sort, and a bunch of Bitcoin standard companies leaping out of the woodwork. MicroStrategy is an example of one of those companies. We're powered by digital capital. So what do? We just buy Bitcoin. This is the last 4 years. We started with $250 million buy. Then we bought it about 48 more times. After we bought 250 million, then we bought 2 billion. Now we're up to about 28 billion. So we put billions of dollars into Bitcoin. I guess it's worth about $45 billion right now. This is a company that had 450 million of free cash, and we converted into $45 billion of assets going up 60% a year in 48 months. In essence, what we're doing is we're securitizing the Bitcoin. We sell fixed income instruments. We sell bonds backed by Bitcoin. We take the money, we buy Bitcoin. We sell equity backed by Bitcoin. We buy more Bitcoin. The bonds make the equity outperform Bitcoin and make us more volatile. The options traders like to trade the stock. That creates demand for it. And in essence, we're just siphoning that capital into the Bitcoin ecosystem. In the fourth quarter, we raised $18 billion, $15 billion of equity. Basically just $15 billion of equity, $3 billion in a convertible bond. The bond we sold to arbitrageurs who wanted to trade the volatility. So we borrowed $3 billion at 0% interest for 5 years, and we bought Bitcoin. So we're borrowing $3 billion, investing it at 60% a year for free for 5 years, right? It's a good business. If you can get it, I highly recommend you do it. It's not unlike an oil refinery. We're like a Bitcoin refinery. You know, you take crude oil, and then you spit out kerosene and gasoline or asphalt. If you want asphalt, you don't want kerosene. And you can't pour crude oil on the highway, right? So we're literally using our operation to create various flavors of Bitcoin-backed securities. How does that do for us? Well, over 4 years, Bitcoin is up 60%, which is doubling the Mag 7, and we're just slightly less than double Bitcoin. So we've returned 110% a year every year for 4 years. That makes us the best performing stock in the entire S&P 500 universe by a large amount. Thank you. Here's my chart. NVIDIA, everybody knows about. They're up about 1,000%, 1,100% over that time period, and we've doubled them. Now, here's the most important thing I'm going to say today. I don't think you can beat NVIDIA, and I don't think you have the wherewithal to compete against NVIDIA creating AI chips. But every one of you can copy us, right? It's a very simple playbook. Anybody can copy us. Any company, a private company, a public company, an individual, a family. That's why I'm on stage. I wouldn't waste my time coming out to brag about making a lot of money with some esoteric proprietary technology that you can't access. I'm not even here to pitch MicroStrategy stock. I'm actually here to pitch Bitcoin. What I'm saying is Bitcoin is the most important thing of the century. It is digital energy. It is digital capital. It is as profound as electricity 100 years ago. It is profound as, as gunpowder, right, was, or steel, or fire. If you figure it out, you can do some good for your community, your family, your company, your country. MicroStrategy happens to be more volatile than every company in the S&P 500. Okay, conventional wisdom they teach you at Harvard B School is volatility is a bug. And the problem with that is everybody strips the volatility off the balance sheet, and they strip it off the P&L, and their companies become very uninteresting. Their stocks die, their options markets die. There's nothing wrong with volatility as long as you have a lot of capital. So, for example, You know, Bernard Arnault has $200 billion of stock, and people write stories about how he lost $20 billion last week, or he made $40 billion. Or how about Elon Musk? He made $100 billion in a month. That's volatility. Okay, you want that volatility to go away? Give away all your stuff, and you will have no volatility. Right? People that own nothing have no volatility. When you're dead, you have no volatility. Right? When someone tells you volatility is bad, and therefore you should give them all of your wealth, right? They're playing you. There's nothing wrong with having very valuable stuff that goes up and down from time to time. So MicroStrategy harnesses that volatility. we actually structured the business to create it. And the volatility actually creates the options market. So if you look up here, we have one of the 10 biggest options markets in the entire stock market. And our stock trades in the top 10 in terms of equity too. And that would be impressive for a small company. But if you look at the right side where you compare our options open interest to the market cap, what you see is that we have the highest open interest on a market cap basis in the world. And you see the same thing with regard to liquidity. At least out of S&P 500 companies, it's hot money, right? I want you to think about, I take 10 tons, I make it a sculpture in your backyard. Well, when you take $10 billion and buy bonds with it, it's like a sculpture in your backyard. It's a paperweight. When I take the $10 billion and I put it in Bitcoin, it's like fashioning it into a flywheel and spinning at 60 RPM. And when you're spinning 10 tons, 60 RPM, you think about it, that's a turbine. There's a lot of energy in that. You can power a city with that. And so thinking that volatility is bad is like thinking kinetic energy is a nuisance, right? When I'm spinning something that fast, it's literally a reactor or a turbine. It'll light up a city. This shows the relative size of our options market compared to IBIT. You can see the reason MicroStrategy is interesting is because everybody's trading. If you want to short Bitcoin, you short our options. If you want to go long, you do the opposite. I don't really mind if you go short, you go long, you trade, whatever. It just doesn't, it's all good, right? I mean, we exist to give everybody the ability to express their opinion, their fear, their doubt, their anxiety, their aspiration. So what I say is your company ought to be powered by digital capital, right? And why? Because it's the highest performing asset you can put on a balance sheet. This is analysis I did for Microsoft. Big, rich company, probably, if not the best, greatest company in the world, one of the 4 or 5 greatest companies in the world. You see, Microsoft's been appreciating 18% a year for the past 4 years. You know, Bitcoin is beating them handily by a factor of 3. But what happens, you know, if you come back here, look at the S&P 500, that's the cost of capital. That's your benchmark. So when I normalize this graph and I say, how are you doing versus the cost of capital? What you see is that Microsoft is beating the cost of capital by 4%. You see bonds are minus 19%, right? If you're buying bonds, you're getting destroyed. You're destroying 1/5 of your wealth every year. But if you're buying Bitcoin, you're beating by 48%, right? You're compounding, whatever, you're doubling every 18 months or something. Now, if you're Microsoft and you generate $100 billion in cash flow and you buy your own stock back, you're basically buying the 4% line. That, compared to buying Bitcoin, is minus 97%. You're destroying 97% of your capital if you buy your own stock, even though you're the greatest company in the fucking world. Excuse my French. How could you do worse? Buy bonds. If you take the $100 billion and you don't buy your stock back, you buy treasury bills. It's minus 99.7%. Like, you literally can't, you might as well burn the money, right? You can't do much worse than this. I would say bonds are toxic. you might as well just inject sludge into your veins. Right? I mean, they're that bad, and you can see it from this chart. So if you want to outperform, you can't just keep doing things the same way. You have to recapitalize your balance sheet with digital capital. Look at MicroStrategy versus Microsoft in the same time period. And I'm telling you what we did. We bought Bitcoin. We didn't sell the Bitcoin. We borrowed a bit of money. We bought more Bitcoin. But look at the difference is what's going on here. Now compare MicroStrategy to Microsoft in terms of open interest in the options market. Our options market is about the same size as them. Our daily trading volume has been higher than theirs. But in terms of options interest, they destroy 98% of their options market by stripping volatility. They're literally stripping all of the life out of their own company. And look at what they do to their liquidity. They destroy 99%. Right? So every company has a choice to make. You cling to the past or you embrace the future. Right? The past is buybacks, dividends, buy treasury bonds. That's the conventional playbook they teach you at Harvard B School. The future is keep your money. This is not complicated. If you have a bunch of money, buy Bitcoin and keep it. Right? Bitcoin is digital capital. The conventional finance theory tells you volatility is bad and capital is toxic. Like literally they're saying to every operating company, get rid of your capital, avoid volatility. But the digital way to see it is capital is good and volatility is a feature. It's life form. So one is regression, the other one is progression. Right? You're investing your earnings, decreasing risk, accelerating growth with the progression, or the regression is you're divesting your earnings, you're increasing your risk, you're decelerating your growth. This is an actual chart. Microsoft has surrendered $200 billion of capital in the past five years. Okay, think about this. Here's my idea for our family. Dad, give away all of our money, but you just work harder. Oh, really, son? That was brilliant. What's your other idea? That's the idea here, right? Those are the risks that Microsoft shareholders face. They disclose them in their own 10K. I literally took them out of their own financial filings. When you actually surrender all your capital, you lever up the company such that all of those risks are actually much more damaging to the shareholders. How do you get rid of that? Well, you have to buy Bitcoin because you want to escape that vicious cycle. Because Bitcoin it doesn't have counterparty risk to a competitor, to a country, to a corporation, to a creditor, to a culture, to a currency. The whole point of Bitcoin is strip away the risk. I want orthogonal to all of my risk. So what if you could buy a digital monopoly for 1 times revenue? And what if it was growing 60% a year? And what if it's more profitable than your own company? And what if you could just keep doing it every year? Well, that's Bitcoin. Bitcoin's the universal merger partner. It's how you actually get out of your rut. If you're a zombie company, it's how you diversify away from your own risks in your own business. So when you evaluate those options, you take the Bitcoin 24 model. We actually plugged in Microsoft's business here, their cash flows, their buybacks, their stock. And we said, well, what if they just sweep their cash flows into Bitcoin instead of buying treasuries? And we said, well, what if they convert their dividend into buying Bitcoin? And we said, well, what if they actually replace the buyback with buying Bitcoin? And what if they just borrowed a little bit of money at 3 or 4% interest, 10% of their capital to buy Bitcoin? Well, that's what happens right there. You add $155 a share if you just sweep your cash flows and avoid the bonds. You add $362 a share when you replace the dividend, $477 a share when you replace the buyback, almost $600 a share if you just borrow a little bit of money cheap. This is against a $420 stock price. it works out to you add $1 trillion to the market cap or $5 trillion to the market cap. That's all money that they could have. What do they have instead? They just give away the money. Okay, so instead of being $5 trillion richer, they're not. It's worse than that, though. The status quo at Microsoft is 95% of the value of the stock is based on forward expectations. You're just valuing future expected cash flows. They only have 5% of the enterprise value backed by tangible assets. Right? Could you imagine valuing Elon Musk based upon our expectations of his future wages? Right? It's like stupid, right? But the point is, you're the shareholder holding a share of that stock. When they actually report they missed expectations, the stock's going to crash. If you actually just start to buy Bitcoin, eventually half of the value of the company is valued on tangible assets. You can't screw it up. If you don't even show up to work for a year, you've still got 41% of your enterprise value. Right? So bottom line there is Microsoft prospers on that Bitcoin standard. They go from 10% a year growth rate to 16%. And the value at risk goes from 95% down to less than 60%. And they create anywhere from $1 to $5 trillion worth of market cap. And what does it take? Oh, it takes 5 people in the Treasury Department to change the financial policy. That's literally all it takes. And I'm going to end with this observation. If it's good for your family, and it's good for your portfolio, and it's good for your company, it's good for your country. So this is a little observation about the U.S. Strategic Bitcoin Reserve. Why? What is the logic of that idea? And the proposal, by the way, is the U.S. buys 1 million Bitcoin over 5 years, buys 5% of the network. Okay, why? Well, first of all, because it's the U.S. endorsing a worldwide global capital network which represents a fair, equitable, peaceful system to resolve political differences. We're resolving the differences with technology and with economic and leadership as opposed to with guns and nuclear weapons, right? So that it's not a bad idea. But the second idea here is that the U.S. assumes economic technical leadership for the world. All the physical capital and the financial capital in the 20th century is going to the 21st century. It's going to go from Siberian real estate and Chinese real estate to Bitcoin, and if the U.S. buys it, then we're basically benefiting from that capital flow. The U.S. already controls the world's reserve currency, the dollar. If people stop using the dollar, they're going to switch to Bitcoin. The obvious thing to do is just own the Bitcoin before they switch to it, because then it doesn't matter if they switch to it. You can basically have all the Bitcoin and have the dollar, and then you don't have to worry, right? And that creates the capital network for the world, and all foreign capital, the Chinese money, the Russian money, all the money in Africa, all the money in South America, all the money in Europe, it's all going to flow into cyberspace on the Bitcoin network, and the U.S. can just buy it. So why not attract the capital to the Bitcoin network, which is owned by the U.S., and then the U.S. benefits from it? If the Lummis bill is implemented as it's written, it alleviates half the U.S. debt. It basically retires half the debt over 21 years, which is not a bad thing to do. But if you think about this in the form of, or against other historic precedents, the U.S. bought the Louisiana Territory for about $15 million in 1803 from Napoleon. He paid for an army for a summer, probably, right? It's worth $12 trillion today, right? The Dutch bought Manhattan for 60 guilders for nothing. Became the greatest city in North America. The U.S. bought California and Texas from the Mexicans, paid $18 million. Who would ever want to live in California? What good is that, right? It was 1848. They definitely didn't see Silicon Valley or L.A. or the movie business, but the point is, it was a pretty big payoff. And then Seward bought Alaska in 1867 for a few $1 million. They called it a Seward's Folly. There was no petroleum industry. There was no natural gas. There was no anything else. It turned out there was $1 trillion of minerals underneath Alaska. All told, so you spend $40 million to increase the United States' landmass and its property by a factor of 5. Where's the world headed? The world's headed to cyberspace. All the AIs are going to put their money in cyberspace. Every global actor is going to put their money in cyberspace. If you know where the money's going, if you know where the AI is going, if you know where the future is going, buy it. Buy the future, right? The greatest deal of the century is the Bitcoin deal, right? The Lummis bill is worth $16 trillion to the country. What's it cost us? Nothing. Like almost nothing. Like you would a rounding error. You could like pledge 25% of the gold and you would have that. If you actually scale up to a triple max or the Trump max bill, just buy 6 million Bitcoin, you could just swap the gold that we've got floating around the treasury for Bitcoin, take over the entire network. It'll be worth $81 trillion to the United States. So people say, well, the U.S. doesn't need it. Well, like, who doesn't need $81 trillion, right? Like we go from like owing money to being net creditors. I mean, maybe you think we don't need it, but it's kind of like saying, well, we didn't really need California back in 1848 or Texas. We didn't need Alaska. We didn't need the Louisiana Territory. Well, maybe you didn't know why we needed it, but the fact of the matter is you're going to build the economy of the future on top of that property, and you can buy it for a nickel today. And, this analysis works for any country. By the way, there's like 13 or 14 states that are putting forth strategic Bitcoin reserve bills. Texas, just one popped up on my screen today. So there's a competition here. The first country to print some of its own currency to buy Bitcoin wins, right? People that just swap their gold reserves for Bitcoin win. If the U.S. swaps gold for Bitcoin, not only would they actually retire their own debt, they would crash the gold network and they would demonetize all the assets of the Russians and the Chinese and all of our geopolitical enemies. So I think there will be a lot of interesting geopolitics here. And I guess I will end with this observation. Look, if you're a fool, then you take all your money and you put it in a third world bank or third world currency or developing world bonds, and you will lose it all. If you're fearful, then take all your money and you buy currency and bonds and you wait to die, and you'll probably make it to the rest of your life and not run out of money, but it's not likely that your kids or your grandchildren will be rich because bonds aren't a very good investment. If you have wealth and you just want to keep your money, and you're conservative and you're traditionalist, buy a diversified portfolio of real estate and high-quality equity, buy the S&P index and buy some commercial real estate and carefully manage it and watch it. You won't get richer. You probably won't get, you'll get a little bit poorer, maybe you'll just tread water, you'll stay the same. Your net worth and nominal amount will trend up 7% a year or 10% a year or something, and so good for you. If you want to 10x your money, if you want to take whatever you've got and do 10x, buy Bitcoin. And if you want 100x, if you want to make extreme amounts of money, 100x, 1,000x, if you want to make hundreds of millions or billions, then you buy Bitcoin with somebody else's money. Okay, you basically have to buy it with leverage, right? Borrow money from a bank, buy Bitcoin. Start a company, raise venture capital, buy Bitcoin. Take a public company and issue public company stock, buy Bitcoin. Take your hedge fund, raise $1 billion, get a 2 and 20 deal, buy some Bitcoin with it, and get 20% of the upside. So if you want to you can get to 10x without a lot of leverage. If you want to get to the 100x or the 1,000x, then you lever something. MicroStrategy went from a $12 stock to a $360 stock in 4 years by levered Bitcoin, right? I mean, this is not a complicated idea. People have levered real estate for 100 years. The difference is this is the most valuable real estate humanity's ever come up with. It's digital real estate, right? It's much more scarce. It's cyber Manhattan. Every business can do it. Any family can do it. Any investor can do it. Any country can do it. Hopefully I piqued your interest, and I just invite you to consider, what's your Bitcoin strategy? And I encourage you to do the right thing for your family, for your employees, for your shareholders, for citizens, for your investors, for country, for the world, for your legacy, right? It's a new technology. It was fire. Some people run away from the fire. Henry Ford put the fire in an engine, put the engine in 1 billion cars, put it in millions of airplanes, put it in all your ships, right? Changed the world. He harnessed the fire. Some people are burned by the fire. Some people harness the fire. I give you electricity. Some people are shocked by the electricity. Other people wire their houses, their appliances, their elevators with electricity, right? This is digital energy. You can run from it. You can embrace it, right? You can run from gunpowder, nitroglycerin. You can embrace it. But the problem is, the technology is going to find you one way or the other, right? And when it does find you, if you're on the other side of a monetary technology, it'll make you poor. You'll be the African tribal leader holding the glass beads when the Europeans come in with gold coins and they manufacture your glass beads and they buy up everything in your country and leave you and your heirs destitute because you weren't smart enough to realize that glass beads aren't going to beat gold coins. You can't cling to your wood when steel comes along. You can't cling to your bronze when a harder metal. And if you don't like air power when they stop dropping bombs on your head, you'll probably discover a love of air power. So this is technology. Don't be afraid of it. I'm not telling you to take your money. I'm telling you to take your time. If you don't believe anything I said, invest 100 hours in this. If you decide after 100 hours it's a waste of time, then you'll know for sure that the other 500 million of us are idiots, and you could talk about it. But on the other hand, and I'll end with this one observation, the average person spends 100,000 hours in their life learning to get a job and then working. Trace how much time you spent from age 6 to age 66, right? 60 years, 2,000 hours a year, maybe you stop 10 years. 100,000 hours you're going to spend to make money. I would say spend 100 hours figuring out how to keep it. Thank you.
Michael, please, we're going to do audience questions, if that's okay. So folks, we want to give you the opportunity, because I know that a lot of you came into this wanting to ask questions. So please put your hands up if you want to ask a question. I think there was question, Orlando. No. Sorry, that's okay.
Yes, thank you very much for an amazing conference. I would like to know what threats do quantum computing signals for the blockchain?
I think right now all the quantum computing discussion is primarily being used to raise money for quantum startups that want to attract capital, but for the most part it's just hype and FUD. Every 2 years people bring up the topic. The consensus of the programmers in the industry is we don't have to worry about computers capable of cracking encryption algorithms that we use today for another 10 to 20 years. At some point, if computers are powerful enough to crack those algorithms, then all of the software in the world run by Google and Microsoft and Apple and all the Bitcoin nodes will all be upgraded with a new set of encryption routines. But you're at least a decade out before that's relevant, and it's not unique to Bitcoin. It would have an impact on every government, every bank, every technology company, every digital product you have in the world. They'll all get upgraded if they need to. But for now, it represents more of a marketing thing for tech companies that are raising capital than it represents a realistic threat to anybody.
Perfect. 11 o'clock.
Hey. Hey, Michael, how you doing? I came to your session last year. Not a crypto guy, but I walked out buying Bitcoin, so thanks, and it's done great. Great share on the arc of family, friends, country for Bitcoin. What are the most piercing counter, or if you were to take the exact opposite side, like what are the biggest counter arguments to not buying Bitcoin?
It's new, it's different, it's not, I didn't learn it in school. Nobody taught me. It's new and different and strange, and it's a different way to see the universe. And most people, they function based upon simple truisms. Volatility is bad. Don't risk. CFOs aren't supposed to take risk, stuff like that. So conventional wisdom is the number one friction point or impediment right now.